I think we're ready to go. Okay, guys, welcome. Thank you very much, guys. We've got some new attendees live as well, so they're trying their best to fit in with the time as well. So welcome, guys. Welcome if this is your first time on my webinar. Now, today is the 5th of May already. We're almost in the middle of the year of 2021. So time really flies. We've got lots of opportunities coming as well. As far as I can see, the market volatility has picked up. A lot of liquidity in the market right now. So we've got a lot of after effect of what has been going on in stocks and yields in the US and all that. That has actually been on a back burner in terms of liquidity. Now, liquidity and volatility are two different things. You can actually have volatility with no liquidity, but liquidity is really important. Both liquidity and volatility usually will actually create great opportunities, but also risk in the market. So we are seeing now a very big build-up of both liquidity and volatility in the market. Hence the reason I'm getting a little bit more excited in trading gold right now. We're seeing a lot of potential for gold. We're going to be talking about gold as well, because, you know, initially it was quite unpredictable with gold. Of course, there were opportunities, but there were lack of liquidity, but more volatility like last couple of weeks or 2 weeks or 3 weeks. But right now we're looking at crosses like GBP crosses, Euro crosses, USD crosses, and all that are building up in liquidity, and that build up in liquidity usually will provide volatility, and volatility is your lifeblood of the Forex market. Okay, so let's get going with looking at the market. Oops, sorry about that. Looking at the market in general with regards to, let me just, okay, there you go. So we've got this Forex early warning heat map, just to give you a little bit of an indication of what's going on in the market in terms of trend. I want to also look at Action Forex. So Action Forex and Forex early warning is just sort of like a cross-reference thing, and I don't want to be dependent on just one source. Let's say if I look at a heat map, I want to have at least 2 or 3 websites that I look at in case something calms down. I'm not actually bothered about it, but at least I have some point of reference. That's all that matters, actually. So not to have like one source and get overly dependent on it, because when something happens to that website, that tool and all that, you'll get panicky. And if you are already panicky about your performance of the day, you'll get double, triple, quadruple panicky when something happens to your tool, something happens to your website, for example. So we want to always prevent that, and we want to always be in the mindset where we should be as ready as possible for any situation, and not to actually add up onto the stress and anxiety of your daily life, you know. So this is very important as a trader, to actually trade, having the right mindset, and to always be ready for anything that actually happens. So we don't want to be dependent on one website, one tool and all that, and then if it calms down, it gets hacked or something happened, and then the performance not good anymore on that tool, then you start to feel very anxious about it, and that can actually blur the clarity of your looking into the market. Okay, so this is really very important. So now let's just look at the top movers for today. This is Action Forex. For those of you guys who are first timers in this webinar of mine, I usually go on to Action Forex, and it's a free website. You've got a couple of tools. When you click onto markets, you've got a couple of tools right there. And I like to go on to top movers, currency heat map, action buyers, and sometimes the volatility charts as well. So when we go on to the top movers itself, you can see that you've got some 10 currency pairs right here that actually gives you a little bit of an idea of where the concentration has been on which pair. Now, if I click onto the daily chart, it doesn't matter whether you click onto the daily chart, 4-hour chart, or the weekly. You know why? The 4 dots is really important. If you've got 4 dots on each column, that means that it's in general, it's quite clear in terms of the trend and in terms of the participation as well, because it is running across 4-hour, daily, weekly, and monthly. So here, for example, I can actually give you a little bit of a rough idea on which pair should we actually focus on. Now here, for example, AUD JPY. Now we are just scouting for the pairs, but we are not really determining or making any decision. This is not a decision-making step. This is actually just a market analysis step, and then a trend analysis step, and then a market analysis step, and then picking the right pair, and then technical analysis. So we need to go through different stages of analysis. So here, for example, you've got 4 dots, meaning that AUD JPY is mostly on, most people out there are traders and all that. It's not accurate, but they are on the buy of Australian dollar versus the JPY. But if you look at all the 10 on the daily chart right here, you can look at more concentration on the New Zealand dollar. There may be a reason for that. We are not sure. But then AUD JPY strikes out, and Euro AUD strikes out as well. And both of them have got AUD in it. Okay, so that actually means that we have got strong buying positions by majority of traders and investors out there. They've been trading Australian pairs, and they've been buying the Australian pair. But what we can actually see, the top 3 right here has been concentrated on New Zealand dollar versus the JPY and New Zealand dollar versus the CHF, but you don't have 4 dots here, meaning that that current trend is not really that strong, or the participation of traders has not been really clear on the trend. Because here the trend may actually be a little bit clearer, but whether or not it is still on a buy, or it has gone consolidation, or it is going down, that is for us as traders to decide independently. So we decide on the trend when we look at the chart finally, and then we disseminate or we dissect certain information from the news and all that. So we gather fundamentals with technicals to fuel. The fundamental is only a fuel to whatever trend that the market has actually decided. And the market's decision on the trend depends on the big boys. Big boys could be in politics, in economics, hedge funds, banks, and all that, and interest rate decisions makers. So we want to also be very aware that today is the 5th of May and it's Wednesday. So we've got the first Friday NFP of the month, right? So that is on Friday. But what happens before Friday is the NFP, your non-farm payroll, your ADP, sorry, your electronic version of the NFP, but then it's a preliminary type forecast. So that is called the ADP. So let's take a look at the calendar for the week. So let's just go on to the economic calendar right here. I just prefer to use FX Street because of the filter, but you know, it really doesn't matter whether you use the investing.com one, the Forex Factory, you've got several, but it's just a matter of just looking at what are the risk events and the data releases for the day. So Wednesday, 5th of May, I like looking at only the high impact and the medium impact. Okay, the long red bar right here, or the one in the middle, orange bar. Okay, so as you can see, you have got ADP employment. So before the NFP happens, on Wednesdays, on the Wednesday before the Friday, you will actually look at the ADP. So what would actually then happen is you've got loads of news, and the main media will actually attack on this area of ADP. So that would actually then fuel more interest into the NFP. Okay, so the NFP and the ADP, the NFP could be hinted by the ADP, but it doesn't actually happen 100% of the time. So ADP for today here, as you can see, when you click on it, they'll give you a description. The employment change released by the automatic data processing Inc. So it's like a specialized data releasing software that audits all that data coming from last month and all that, to give a little bit of an indication of what the government expects in terms of employment data and all that. Okay, non-farm payroll, basically it's mostly on employment minus the farmers. Okay, so generally speaking, a rise in the indicator has positive implications, vice versa. But we know that, it doesn't always happen like that. So I don't want to get into that, because we will be going into doing a bit of a technical type analysis as well. So then followed by the ADP, we've got the ISM as well, which is very manufacturing related, released by the Institute of Supply Management. So we've got some strong, high volatility or high impact data releases as of today. So that might actually be quite impactful of the market. So I see lots of liquidity and volatility. And on Thursday, tomorrow, the 6th, we're seeing a huge expectation on volatility for the pound because of the data releases in the UK, and we are talking about very big data, meaning very important ones, especially bank related. So GBP as well. So let's get into gear of which pair would actually be good starting from today, and then we revolve around that and want to talk a bit about gold and your current position, especially because this is midweek now. So any ideas that you have had, or you've got a pending order, or you've already floating with some trades at this moment, we can actually discuss that. And it's probably best to share it with everybody as well, and then we actually learn together and trade together. Okay, so let me get going on that. But just before that, we want to cross-check onto the heat map right here. And from the heat map between Asian session and European session, I see we've got some participation of USD crosses, and not too bad actually in terms of liquidity coming in, participants coming in, but mostly they are actually selling the other pairs compared to as opposed to the US dollar. So they're buying the US dollars. So now we should be looking into a little bit of a decline in gold, but let's look at US crosses and combine that with our take on gold as well. Now here, for example, Asian session CHF or Swiss franc crosses were good in the Asian session, but right now it's a little bit on the low side. So I wouldn't actually look into that so much, but I would like to look at New Zealand crosses as well, because on the top movers, we are looking at that. Top three was New Zealand crosses on the top two, and then the third one is an Australian cross. So we want to look at Australian crosses as well. Okay. At the moment, Mr. Palani, it's good to focus on gold. I mean, we like to focus on certain pair following the market. We cannot focus on something that we think it might actually be going up or going down, mainly because we'll get trapped into it. But right now, it is actually sort of the right timing for gold. 1 week, 2 weeks ago, a lot of volatility. People, some make money, but some are trapped in gold. But that was because they were trading at the wrong timing. Of course, they will see the chart. Wow, big moves and all that. Big moves and all that are mainly volatility, and it may not actually be liquidity. Liquidity is very important. Like, for example, if you talk about a company, and you say, oh, that company is really solid, really liquid, that means they've got money. If you've got money in the market, then you can do wonders in the market. If you don't have money in the market, you only have volatility, it then will be very, very risky. So last 2 weeks ago, even for myself, I didn't look into gold so much. I was guiding people to trade gold, but me, myself, I shied away, but I just started to trade end of last week. And then now it's time for me to get into gold trading. So we want to look at gold, and mainly because Technically, it is showing some signs that it is good timing to go in. It's good timing to start looking at gold as well, mainly because of what's going on in the States. Now, in the States, there were a lot of tricks in the market last 2 weeks, 3 weeks ago, because there was some manipulation in the data. There was some manipulation into politicians talking about the economy and all that, mainly because of Biden, because Biden has come into the political stream. So you know how it is, right? The first 100 days and the first months has to be all positive, positive, positive. But then all these positive things about the economy may only be promotional or marketing of the new president, you see. So this is why now they are questioning about all the positive marketing that has gone on. Now, when data start coming up, that doesn't really match so much. So now they are questioning the data, and they're getting into more clarity into the actual position of US economy. Actual position of US economy will tell us good reason to believe whether to buy or to sell the US dollar. So when we are clear of the US dollar, then we are clearer with gold, because gold's movement has a lot to do with what goes on in the United States, whether it's politically, economically, rates, decisions, everything. Okay, so that's where we see gold. But right now, gold is not really dependent on what goes on in the US for now. Why? Because we've got a global epidemic of COVID right now. Third wave is coming in. So now it is time for safe haven again. So we can see that gold's prices have actually broken out of some key levels, and this is what we want to look at. And this is why we say that it's now about time to actually look into gold again, full swing, and trade in stages, and it will be much safer in a way, because gold is very volatile. Gold is very risky as well for young traders, for smaller traders. It's really risky to trade gold. But then, to minimize or just to lower your risk a little bit and to get more clarity, you need to trade at the right time. And usually it depends on the market situation, on the global economic situation as well. So right now, I see that we've got a lot of things to talk about gold because of the level it has already hit, and it's gone into a bullish, nice territory as well. But then it's also got some corrective ones. So we want to identify that, trade in stages, so that you will remain safe and not trapped into a trend or into a trade and then don't know what to do with it, and then whether or not to close the trade with a big loss or just wait until it comes to that level. So we don't want to be trapped firstly in a situation. So it's best to ride the market properly. Okay, so all right. Okay, so let's get going into looking at pairs. Now, I see that the JPY yen crosses good in the Asian session, but very, very slow here. Okay, something may be of interest to the Asian traders in the beginning, but then European traders and the European session does not really support the JPY crosses. So don't go on to pairs that are not liquid enough, not volatile enough, especially liquidity. Okay, so here it's not only a heat map shows you what's the trend, whether it's bullish or bearish. It also tells bullish or bearish. It also tells you the market participation, which has some connection with liquidity, money flow, all the cash that's going in, because you want to play around the market that has a lot of liquidity, a lot of cash, and a lot of interest. So then it will move volatility and liquidity will make trend clearer for us as well. Okay, all right, so sure. Let's look at one by one, but you guys can actually come up with a list of what to look at as well. AUD USD, NZD USD, no problem, and gold. We will look at all these, but best is if we start with some major pairs first. So always start with Euro USD first, and then maybe GBP USD as well, and then we go on to the pairs that you guys have actually picked. Okay, so let's look at that. Now, most important is we need to look into pairs that has hinted us a bit of liquidity. Okay, so it's better to do it that way so that you will be more focused. into the pairs that is worth to look at. Because if you look at a low liquidity pair, like for example, give you an idea, if we go onto a heat map like this, and then you right now come up with a list of JPY pairs, it might actually be wasting your time as a trader. It might actually distract you, and other pairs may be moving really fast, and then people are making money with it, and you are going to be stuck onto the pair that will be trapping you in terms of your time, okay, and money as well. So here, for example, I wouldn't actually look into all these pairs right now, because the Asian session has already exhausted that interest, and we don't see that interest coming from the European market yet for Japanese pairs, for Japanese or yen crosses. But I think the USD crosses might be good. So your idea of looking at gold as well is a good one, mainly because we have USD participants. We've got all these bars quite long, steady, and they are for the USD crosses. So major pairs is good to look at. And when you look at major pairs, including the basically all the USD crosses, then it's good to actually look at gold as well. Then you can see gold moving because of that, because gold is quite dependent on what goes on in the States and also the US dollar. Okay, so there you go. I wouldn't look at yen crosses. I wouldn't look yet at euro crosses first, but maybe a bit later, after the London Open and all that, potentially, until it shows me that. And also Australian dollar crosses, maybe. Okay, it's got some there, but not that good. New Zealand dollar may be a little bit better, or Australian dollar, New Zealand dollar, almost the same situation, because right now we have to forget about the Asian session. Okay, we have to look into the European session, US session, London Open especially, and now we want to look at that concentration there, so that we don't actually waste our time looking at pairs that maybe we click on it or do a pending order, and then we realize, oh, why did we do that? It's not moving, things are not happening, have to wait longer. So we don't want that. The waiting longer and all that is because of your market participation and liquidity in the market. That's why. And then it goes into sideways, and then it goes slower and slower. So we don't want to participate in trends or trades like that, or currency pairs like that. Okay, so let's get going. Let's just take a look at, I'm just going to pull out the major pairs first. Euro USD especially, it's the most traded one, so we should actually be, I just want to move this up here. Okay, so let's take a look. Now, I just want to share a little bit of what I have noticed. Yesterday, I placed a trade on GBP and ZD late last night because I was just experimenting on things, and I've noticed that at the time of analysis, there was very big participation and liquidity on GBP and ZD late last night. I think, probably the early hours of the morning, if I'm not mistaken. So I placed a trade for the buy. It's not kicked in yet because I'm a pending order trader. Okay, so I only trade pending orders mostly, and I see that there may be a bullish run, as you can see it on the left. So this is for GBP and ZD. So I'm just going to share that with you on what the buying price was. So I 95.10, 1.9510 was my buying price. My take profit 1.9540. It's not kicked in yet, so it's still early on that side of it. But now it's trading at 1.9410. So yeah, still early, still very early, but this is a pending order, so I see a potential of it rising. And my buy price is 1.9510, take profit 1.9540. So you need to decide on your stop loss right there. This is a 30 pips roughly potential, so you want to double that in terms of the just so that you don't get stop out easily. So at least 60-70 pips of your should actually be your stop loss size minimum, because of the GBP and ZD being a very volatile pair. If you are aiming at 30 pips and then your stop loss is at 30 as well, it's not going to make much sense. So hence the reason you need to ask yourself that question about risk and money management, whether or not it's worth for you? Are you willing to? And then it comes to the lot size. So if you are risking 60, 70 pips, maybe you are not going to be trading one lot, let's say, right? Because it's a lot, that's 300 pips that you're willing to lose. Are you willing to lose for that, for just 300 pips? No. So you want to trade smaller. So you need to risk manage and look at your own risk appetite. Okay. No problems, Aaron. It's okay. It will be recorded, so we'll send the link to you. No problems. Okay. All right. All the best. Bye-bye. Okay. So here, for example, this is for GBP and ZD. So now let's get going on to a pair. Let me just choose pair right here, just so that I can get my Euro USD up first. Okay. Let's look. This one down here. Okay. All right. So Euro USD, let's just take a look at one of the charts. We go on to the daily chart, for example, and the quickest way is just to look at one time frame, especially 4-hour or daily, it doesn't matter, just to look at the behavior of candles. Also look at price. You want to look right, you want to look left. As you can see on the daily chart itself, it has pierced through all the three lines to the upside. Now it's making a little bit of a correction. Now, when you look at it just from a bird's eye view, you can see that you've got lower highs. So lower highs is a step going downwards. So the outlook is more or less, to the downside. When I look at this price here, 1.2004, it's just very close to 1.2000 psychological level. So that means that it's on the way down. Does it actually have a upward type potential? That means a reversal. Is a reversal coming at this moment of time? So what I can notice is that as price coming down, you want to train your eyes to look to the left a little bit, follow the current price, and you can see that something is actually hinting you, something is actually telling you Euro USD is going down at this moment of time, as you can see, let's say on the daily chart. But on the left, as it goes down, it might actually go into a bit of a reversal, because we've got a very strong support here. So then you want to draw a horizontal line right here, okay, on the opening price of the mother candle, and another one on the longest wick that you can find. So now you've got a little bit of an idea, meaning that, okay, yes, it's dropping, but it might actually reverse somewhere in this area right here, where that reversal would probably be at the 1.1961 area. Now, before reaching 1.1961, it would actually be reaching 1980 area. So it might actually do a bit of a reversal there too. So now we need to also look out for what 1980, 1.1980 area as well before it reaches there. So what do we actually do right now? We need to actually understand that it's probably not an ideal time to just sell straight away. If you want to take the risk, you can, but you need to understand what are the risks to actually take that decision to actually trade right now. Okay. Yes, of course. Hi there, Wong. Good to see you. Okay. Yes, it's quite easy. On the settings of the three EMAs or the four EMAs, they are all EMAs, okay? All the four lines are exponential moving averages. So you just need to go on to insert indicators right there, okay? And then you go on to your trend, then you go on to your moving average. You don't basically, you just choose the MA method exponential, and you need to apply 4 types of parameters, okay? So you've got the 50 EMA, 100 EMA, and also 200 EMA. I also have the extra line. The red one is the 8 EMA. They are all applied in closed, and they are exponential moving average. Okay, hope that's clear. So that's the only indicator I actually use. I mean, they are not really an indicator for me to enter the market or crosses and all that. No, I only use these indicators as my trend analysis. So how do we actually use these indicators? Is actually quite simple. When you look at majority of candles, if they are moving above all the 3 lines, all the 4 lines, let's say all the 4 EMA lines, then that actually means that it is on an upward type trend or bullish. If it's all under the 3 lines, then it's actually bearish. But you need to also look at the way the 3 or the 4 lines work. If they work, if they actually move like the 4 lines move like a river at, upwards and pointing up at the ceiling, and all the candles are above the 4 lines, then you've got a very clear trend direction, which is mostly uptrend, and vice versa. If you see it all downwards and then all the candles are under all 4 lines, then it's actually downtrend. Okay, nothing to set, only apply it on close, all the rest leave it as it is. Yeah, no changes. Okay, so it's 50, 100, 200 and 8. All right, okay, so just a bit of an indication. So now we are still on Euro USD. Let's say on the 1 hour chart, you can see that the lines, when the lines are crossing, when the line crosses one another, for me as a trend trader, I use it as only a trend indicator. So that actually means not a very good trend, not clear. The trend is not clear. They need to not touch each other. All the 4 lines needs to go down like this. If they all go down like this and all the candles are under it, then you've got a clear trend to the downside. At this moment of time, it looks like there may be a correction and all that. Why? Because if you compare 1 hour chart, you look at the 1 hour chart, you've got a bit of a crossing going on, right? Then you look at the candle itself, it start to weaken, the body of the candle start to weaken, and then you've got the wick. Now, the longer the wick of the candle goes down, the longer the wick to the downside, that means it's going to reverse. That means something is going to happen to help it reverse. And the other thing as well is that when you look at the price, it's 1.2000, and the 00 at the end of the 4 decimal place is actually your psychological level. So usually when price comes down, let's say there is a potential of it reversing at the 00, 20, 80 or 50 psychological level. Okay, so for those of you guys that are seeing it as a little bit of a new thing, don't worry, we'll be repeating these ingredients of market analysis all the time, so you'll get practice live on the live market. Okay, so if I compare your 1 hour chart with the 4 hour chart, now you're looking at it, and most traders, they look at this and they go on to 30 minutes or 15 minutes and they straight away say it a little bit too fast. They say, oh, it's a downtrend, so sell. Oh, it's an uptrend. So downtrend or uptrend has to be an overall summary of the market, not based on the shortest time frame or one time frame only, or the candle that you're seeing now. If you look at it that way, most of the time you'll get trapped in the market and you cannot actually achieve consistency like that in your trading. So you need to look at it as a whole first and then trade it based on the time frame that you want. And you need to choose the time frame that you want according to your lifestyle and your schedule of your time for the day. Okay, whether you are short-term, intraday and all that. So you look at it as a whole in a bigger time frame to know the strongest trend as a whole, and then you go to lower time frame and fitting it with your lifestyle, your personality of trade. Okay, so if you've got only a couple of hours to look at the market and you need to make a run, you need to go to work and stuff like that, so you're a short-term intraday type trader, maybe you want to use pending orders, so you need to look at it as a whole and then go on to shorter time frame. So as of now, if I were to go on to the 1 hour chart, for example, I can see that the bias is to the downside, but it may actually be correcting quite soon. If I look to the left, it's got a little bit of, it's got the most recent support as well. So then if I look to the right in terms of price, I see that it's really close to the psychological number of 00 as well. So now the thing is, it's biased to the downside when you look at it as a whole on a 1 hour chart, but then when you put other ingredients in, it tells you that no, I don't want to go in and just click on a sell button right now, because it may actually correct. It may actually do a correction. There may be a reversal coming through. So then you need more data and you go on to higher time frame, and then you look at it and you see that yes, it's coming down, but then the trend is not clear. Why? Because the candles are trading inside the 3 lines. You see, it's not under all the 3 lines. The current price right now and the current candles, they are all inside the 3 lines. And that's actually very dangerous, because if you want to click sell now, most probably you'll get reversed. Okay. Now, the other thing as well is that As it comes down, I see that there is a potential on the 4-hour chart to actually meet the 200 EMA right there. And that is actually at the 1987 area, which is very close to the 1980 psychological number. Okay, so it's got an area that it can actually reverse, because usually it comes down, it can actually reverse at any one of the EMA lines as well, the 50, the 100, or the 200 especially. Now, we've got the 200 EMA here really, really close. So then we've got some support here as well, and then we've got support there. So what we can then do is still get rid of that, but then use this support area right here with the lowest body you can find, and also the longest wick that you can find. And you need to make a zone. Now, this is my support zone, not support level. Try not to actually draw just one support or resistance line. You need a support or resistance zone. So this is a support zone for me based on the 4-hour chart. You have got this area here. So now for Euro USD, it's probably not a very good idea to actually do any form of entry, whether a buy or a sell. Why? Because it's not giving us clear direction at this moment. It's on the downside as a bias, but it's also not clear on the trend, and it's actually going most probably going to reverse. We've got loads of nice support right here as well, support areas, and it has made a nice zone here. So it's if you're looking at selling, perhaps after it has gone under that zone. If you're looking at buying, then after it has actually gone above that zone. So in my opinion, I think from looking at the 4-hour chart itself, if at all we have got negative news in the Eurozone and more positivity for the US dollar, let's say, and the US, then it should break out and come downwards. Now, as it comes downwards and the downtrend for Euro USD will become stronger after it breaks under this zone, as I have showed you. But not only that, after the candles have actually gone under the 200 EMA as well. Now, if it breaks under that area there, it will break under the 1992 area, which is already under the 2000, right? So that means a lot of bears may be coming in. So as the bears comes in, it will actually come in and push the price down to 1.1980 area. If the bears are really strong and they can pull down the price below 1980, then you are seeing a good potential to sell and then participate in the sell. But then as you participate in the sell, you can actually participate in the sell at only at 1970. 1970 would be a better price, but then it's not a good price to enter as well, because it's too close to another support area that is actually quite strong. So that then depends on your risk. Okay, so the market is giving you a little bit of a selling position, but you as a trader need to make that decision entirely of your own, whether or not you want to take that selling area. Potentially there is a selling area, but it's also quite risky. So you have the market is giving it to you and say that, hey, you know, there is a selling area that you can sell that is worth about, let's say, about 30 pips. There's 30 pips to take here, but there are traps in there within that area. Okay, so then you need to think whether or not I want that 30 pips, and if I want to take the risk of that 30 pips, how much am I willing to risk in terms of my stop loss level, and how much am I willing to risk in terms of value per pip. What am I going to trade in terms of lot sizes? Is it just 10 cents? Is it just $1? That needs to be entirely your decision. So I have pointed out an area that you can trade, but I've also pointed out the risk of that. So you've got an area right there, because at this moment of time, we are also looking at data releases. We're looking at the ADP and all that. So we want to look at USD performance as well. So we've got the data releases to guide us through on the US dollar side of it. So it does actually depend on the US dollar. So if US dollar is really strong, let's say ADP figures is really on the upside and stuff like that, then you are seeing that to be more and more possible. And then as you come down to this second, under this second area, then you've got more downward movement. But in my opinion, I think it's due to a reversal to the upside for the euro. The reason is we will take a look at gold right now, mainly because gold has given us a lot of hints to the upside. Okay, starting from yesterday onwards and all that, a lot of upside type move. So a lot of upside type move would actually mean USD would be looking into the downside. All right. So if USD is on the downside, then euro is most probably on the upside. And the other thing as well is that if I look at the 4-hour chart right now, if I were to imagine downward movement and all that coming through and all here, maybe there is a good potential it can actually come through. As we are looking at the live market now, we've got this bearish mother candle coming through. There is a potential for it to come through and come down here. But let's say we imagine that more downtrend, and then we see that the downtrend coming in and going through this second green zone. In my opinion, there is no power of the sell at this area right here. Okay, actually, even in this area, I don't see a nice power. Okay, but there is a potential for it to come down here and find support. But then if it does come through here, I don't see bearish candle to the left. I don't see bearish power in the past. So if there are no bearish power in the past, we've got some here on the longer term. On the daily chart, yes, there is potential. There is potential. So in this area, yes, you got some sell. But in this area down here, you've got some, but not very strong on the downside. So let's be a little bit wary when you want to trade the Euro USD for now. Okay, so let's also get back to gold, since we're talking about Euro and USD. Let's look at gold. Now, gold, this is on the daily chart. I see a potential of a downward type movement. That is why, I mean, from a technical perspective, there's some downward movement. And then I talked about how US may be weaker as well. So hence the reason it's a little bit tricky. Now, I want to tell you why it is actually tricky. Just from the EMA lines itself, you can get a clearer picture in terms of the trend. So always focus on the trend on various time frames so that you don't get more and more distracted and more confused. Okay, so don't get confused with what to trade, where to enter and all that. Always start with the trend first. Let the trend be your friend. Okay, so what that means is that it will be your friend if you take it as a friend, meaning that you pay attention to the trend. Okay, then your friend will come to you, meaning it will give you clarity of whether or not you should buy, you should hold, you should not do this, you should not do that, but you need to pay attention to the trend. So always go back to basics. Start with a lower time frame, start with a big time frame, doesn't matter. But if you start with a lower time frame and build it up, and it should give you a little bit of a story. So the trend story will actually be given to you from the positioning of the candles together with the EMA line. So like now, for example, on the 1-hour chart, look at how the 3 lines are moving. Very simple, right? If we start with the 3 lines itself, the trend is confused because the 3 lines is going sideways. Look at the 3 lines sideways, right? But the candles are coming down, right? So that's why it's quite confusing. But there is no trend at this moment based on the 30 minutes to 1 hour. In the 30 minutes to 1 hour time frame, there is no clear trend for gold. So it doesn't mean that the candles are going down is a downtrend. No, it doesn't work like that. Okay, so not because of the candles, it's because of the trend overall, what people are doing outside, the investors, the hedge fund, the banks, the everything. They are the one making the trend, not the traders. Okay, traders are supposed to ride along the trend that's been made up by the big boys. Okay, so Now, when it comes down like this and there's just no trend, we just don't, we just hold, we just don't do anything at this moment of time. It's confusing market for gold at this moment, okay? In the next 30 minutes to 1 hour, there is no trend. So, but there is also a bearish, a very big bearish candle right here, which actually found support in this area, okay? So we've got that to notice. This is just how we need to train our eyes as well. We looked at, okay, there's some bearishness, but then there's just no trend. We don't do anything. We don't buy, we don't sell. We compare that 1 hour with the 4-hour chart. Now, with the 4-hour chart, everything starts to change. Okay, everything is different. Now, on the 1 hour, as you know, there may be a bit of a reversal, okay, because it's not clear. The downtrend is not clear. When we go on the 4-hour, all the bias is more to the uptrend now for the 4-hour chart, mainly because the 3 lines are pointing upwards. So now it's coming down, but it's coming down a little bit weak at this moment of time. The current price is at 1776.37. As we look to the left, you've got some support area to actually look out for. You've got this support area, you've got this support area. Now, all these candles are going like this, like soldiers in one area. This is very, very important. So what you need to do is to make a box, at all this area right here, let's say. Okay. I want to touch all the wicks as well. So then, and you want all this area. Okay. There you go. So now we know that it's an important decision-making area. It needs to break out of the zone, then you've got more downward pressure. So is there power if it comes down here? Is there some power? There is some power of sellers, okay, here at this area right here. So the sellers, yes, they can come down because of this bearish candle right here. So it is a possibility for it to actually come down, bang, 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 all the way down here, okay? So this is where it is possible for this. Okay, give me a second. All the way down. So you will find support at this area. If at all USD is, let's say, really strong, something happened, then it would actually pull gold down more and more and more, right? Maximum. So then if it does, then it will go through all these lines right here and find support here. Could also find support at any one of this line. So right now, it looks like something is pulling it down. So the bias is more to the downside, as you can see. Now, the next thing as well is to look at this support area right here, okay? And this is an area that we need to also respect this zone. So I want to draw your support zone here as well. Very, very significant area. A lot of candles, a lot of wicks. So you've got a bit of a selling zone in the black area right there, okay? So we've got down here, up, but then now it's due to the downside. But these green zones here, this zone here is a support zone as well. If I look to the left as well, you can see previous resistance right there, support right here, support, support, support. So yes, it could come down, but then it potentially will find support again here, which is also very close to the 50 EMA right here. Okay, sorry, the 100 EMA is here. So 50 EMA is there. Currently, the current price for gold is very close to the 50 of the one, this 50 EMA right here, 100 EMA here, and 200 EMA here. Okay, any questions on gold, guys, at this moment of time? Questions on gold? No? All clear? All right. Okay. What are the pairs that we want to look at? Let me just go back to the chat. Give me a second. So AUD USD, NZD USD, okay, and USD CAD. So the majors, we can go to AUD USD and see what's going on with AUD USD as of now. Give me a second. Okay, so this is for AUD USD. Right. Okay, no problems. Okay, so AUD USD now very clearly, as we can see now, it's on the daily chart. Oh, there's a lot of mess here. Give me a second. Let me clear out all these drawings and objects. Okay, so as we can actually see, we have got bearishness. It's actually on a bullish type bias, but at this moment of time, it found some resistance on the way down. When we look to the left, we've got this candle here. We've also got this mother candle, we've got some other candle, but we've got this mother candle and this mother candle. So potentially, if it were to actually come downwards, it would actually start to find support at this area right here, potentially. This is based on the daily chart. Okay, 76.60. So 76.50 onwards, it's now trading at 77.14. But as it comes down, 77.00 is a psychological level. Maybe you'll find support there. Also, you've got this very big move here. It went up to this point, came down, and the bearish candle finished there, and this is a price at 76.98. So it's actually at 77.00, very close to 77.00. So in my opinion, it'll find support very soon in this area. Especially, it's already found support exactly on that area, on that blue line that I've just drawn, which is a closing price of this mother candle right here. So at this moment of time, most probably it's looking at a direction to the upside. But on the daily chart, if the direction is on the upside at the moment for AUD USD, as it goes upwards, there is a bit of a problem because you've got all this concentration of resistance all at one level at this moment of time. So let's say it goes up, it might find resistance here first because you've got a bearish candle right there. And that area is also some resistance for the rest. As it goes upwards, let me just get rid of this and get rid of that. And I'll change the color here to red. There you go. So we've got that there. Yeah. So this is a resistant area. As it goes up, it needs to go above this red line that I've drawn, and that's at 77.42. So let's say 77.50. So I will point out the resistance level based on psychological level 77.50. Okay, 77.50. Now, okay. So what I'm trying to say is that it needs to go above 77.50 to give you more hints of upward type movement. But there is a danger zone here, okay? Because look at this resistance area, it's quite powerful, okay? And that actually is lined up with so many resistant areas, resistance zone right there. So my guess is that you've got a little buy type risky trade for about 40, let's say about 40 pips is possible right there, okay? But then as it goes, if it does go above and break out of this area, this line 78.20 psychological level. So at 78.30 onwards, maybe also another area that you can actually buy more. Okay, so 78.30 potentially. So above there. So we've got resistant area here. So I'll just lay out the resistant area. Okay, so here. Oop. There you go. Right. So nothing much to do at this moment of time. If it does actually go 77.60 and above, then you can buy a little bit for 40 pips in within this area. But right now, it's very risky. For you to sell is risky. For you to buy as well is risky at this moment of time. And if it does actually go through this zone and go above, then you've got a little bit of buying as well, which is at this area right there. And and it's not really that much. It's not giving a lot of hints that it will be really strong market to trade as well, because you see the trend is not clear. You've got all these lines between each other. So AUD USD, not really very nice, not really very clear as well. Okay, so give me a second. Let me just check on some of the tools I have on my mobile. Okay, let me just check. Okay, so in terms of trend, AUD USD, as we have seen on here as well, is just probably best to actually look into. It's more on the selling side in the European zone, in the European session, sorry, for AUD pairs. So AUD USD, it's seen to be quite strong on the selling side of it. Market participants is on the selling side. So we want to know what happens with the ADP as well, because you're combining it with the USD. So it's probably best to look into what's going on there. But the bias is showing that it is sort of governed by a lot of resistance. As you can see, even here is just showing some very clear resistance, block the price at the very top. So I think at the moment we can actually see some selling here following this candle right here. This is based on the daily chart. So here, for example, now the current price is at 7707. So I see that a potential fall of at least about 50 to 70 pips is quite potential. But then you want to look at this area as your support right here. So let's say if you're selling at 7690 would be a better price, because you want to, look at this area right here as a support, right? So this area as a support here, you should be selling under this support area. So under this support area would actually be at 7690 would actually be better. So if I sell at 7690, let's say 7690 would be a better price to sell. So you can do a pending order at 7690. This is for AUD USD, by the way. And then you want to come down to this area here, which is 7635. Okay, 7635 would probably be okay as well. Let's see whether I can find some, or even 76, 7660 or 7630. So if it is 7635, let's say, or even 7640, that's about 50 pips already. But your area for a safer selling is down here at this area. Okay, so it should start at 7690. So 7690 is your better selling price for AUD USD. Okay, that's your entry. And then you want to exit before 76, before it reaches 7635. So whether 7640 or 7635 is entirely up to you. So that is about 50 pips potential right here for the sell, okay, for AUD USD. So that's it, guys. AUD USD. Any other pairs that you want to look at? It was NZD USD, was it? Okay, we can take a look at NZD USD. Now, usually NZD USD would mirror or look at AUD USD as the big brother. So it usually does that. Okay, oops, sorry, guys. Okay, so any questions at all, guys? You guys are okay? AUD USD, it's exactly as you can see, it mirrors the exact moves of AUD USD, even from the daily chart itself. So it would probably be more or less the same style of trading. You see that positioning of a bearish candle is also there. And then you've got an area of support right there. It mirrors all the support areas well. So you need to basically sell at 7140. 0.7140 would probably be better to actually sell, or 7110 would probably be 7110 would probably be better selling price for NZD USD. And if you take it at 7110, roughly 7110. Okay, and you take profit above 7000, so you want to take profit at 7010, okay, or 70. You've got more on NZD USD. You've got about 70 to 80 pips to take for the sell on NZD USD. But you want to be careful in trading at 7140 instead. It's actually at the 7150 area. You've got a bit of a bearish movement right there as well. So yeah, it's good to take that, but I think the exit price would probably be better here, which is 7060, I would think would probably be better. So you can do a sell pending order for NZD USD at 7140, and then you take profit 7060, just to be on the safer side. Okay, 7060, and I would think it's still about 60-70 pips even at that price. Yeah. Okay, guys, any other questions at all? All good? Any questions? All right. Okay, good. Thank you, Wong. Wong, if you've got any questions on geometric pattern as well, you can actually ask. We can do a short one now. If you've got any doubts, anything that you want to ask about geometric patterns, feel free. And you can send me screenshots on directly to Telegram as well. It's entirely up to you. So yeah, if you've got any questions on a particular pair right now, on geometric patterns as well, you can do that. Just because we are on NZD USD, maybe I'll draw very quickly your geometric pattern. So here, for example, if we are looking at downward movement, there is a potential A here, B here, C here, D all the way down, right? This is for NZD USD. So if I were to pull A to B right here, this is just a bigger picture for practice purposes only. We're drawing this line, but oh, not sure why it's not moving. So this is giving me some hint that if at all you've got a lot of catalyst movement to the downside, then you are seeing a potential of a big fall right to this area. But whether it will do that directly or for now, we don't know that yet. But this is how you draw your ABCD pattern right here. This is your bearish ABCD pattern. If the downtrend is really strong, then you are looking at ABCD pattern like this. And when you cross it like that, the center of the cross will give you a hint of where would actually be a nice place to sell. And under this line here is your selling price. I'll just change the color to yellow. That's your centroid area, right? So even the centroid has actually given us some hint that you need to sell under this support, under this support and all that, and automatically it's quite a good area to consider selling, but under this zone. And where was that yellow line? The yellow line itself was at 71.14. So you would need to actually sell at 0.7110 anyway, because it is really close to 71.20 psychological level. You need to sell 10 pips under 20, which makes it 7110, ideal price to actually sell. So you can actually sell earlier as well and then take profit. So you need to take it in stages as well, not to just aim and open your trade for NZD USD and think and hope and pray that it will go to the D point. No, you don't do that. Okay, so you want to actually be really careful, and you want to sell maybe and take some here, wait for price to break out here more, and then take some more later on. Okay, so but this is your focus at the moment, is this area here to actually sell in stages. But the overall big picture, that's a potential, and a probable potential only, just a potential, not certainty that it will really drop there. So you need to respect this area for support as well. So, if you're selling, you want to exit here as well. Okay, you want to exit there as well. So you are selling, let's say from here, you're selling, take profit, and then you re-enter again, you sell a little bit more here, then you sell again here, then you take a bigger chunk, or maybe you want to concentrate on this area here as well, because this is a quite a powerful area of support as well. So there, then under this area, you take again until it reach D. So you want to trade in few stages, in various TPs as well, not to have one trade, leave it open and hope and pray until it goes to the D point. No, that will actually be a disaster. That would be very, very risky to think that way. But the geometric pattern will give you an idea of how far and how big that pattern is, how big that opportunity of selling would actually be. But it doesn't mean that it will go straight on following a straight line. It will go up, come down, go up, come down. So because of that up and down movement, a little ABCD baby patterns will actually form. So you want to trade that baby patterns in stages until it reach that big picture at the D point, not to leave one trade open and think, oh, we're going to go there. And that is because we are looking at it on a daily chart, and that daily chart would actually consist of so many pips, right? So that many pips would also be a risk for you. That's 350 pips worth. So we cannot take all that 350 pips, because that 350 pips are not going to be given to you just on your plate like that by the market. The market is going to make it quite tough. So you need to look at all the opportunities, all this black sea area for trading, in order for you to reach to the D point. But you won't get that 350. You will get that 350 pips minus the bones, minus the areas that you cannot actually eat, and then you will get maybe 100 pips in total. But still, it's measurable profit, and it's actually being planned on how do you actually dissect that area to trade. Okay, I hope that's clear to you guys. Okay, guys, any questions at all? I think we'll end the session for today. Any questions? Any other pairs that you want to look at? USD CAD, yes, of course. USD JPY. Okay, we'll take a look at both USD CAD and USD JPY. We'll take a look at USD JPY and then USD CAD. Okay, all right. So let me clear off these ones here. Okay, USD JPY. Let's see. Okay. Now, from a chart's perspective, I look at the daily chart or the 4-hour chart. I just want to see what I can notice. Now, straight away on the daily chart, it's moving to the upside at the moment, USD JPY. Okay. Very quickly, that's what is going on. As it moves to the upside, it may have to the left some resistant area, but I want to quickly point out this area here as a resistant area. And then maybe this zone right here. Okay, so this zone here is a resistant area of previous movement. So then it became support here. So as it actually goes up, I want to look at bullish candle right here. Now this bullish candle ended closing price here, okay, which mirrors this mother candle right here. So that basically becomes my area of maybe take profit potentially. Okay, so that means if you are actually buying at the moment USD JPY, you should actually exit at this yellow line or before the yellow line, because the yellow line is at 10964. Now 10964, before it reaches 10964, it has to bump into the 10950 psychological number first. So maybe, just maybe, it might reverse a little bit earlier. Okay, so then 1050, I need to mark the 1050 area, maybe red as your psychological level. You see, so if I mark it there, it's really close already. Now you are at 10940. You're supposed to exit now. Okay, but if you want to take the risk, it might actually reverse at either one of these lines here. So I will make these two lines as my resistance zone. Okay, so is it really worth for you to actually plan your trade right now? Maybe not, but if you want to buy, you can actually buy more after it actually pierces through and go above this green zone right here. And the best buy price would actually be not as soon as it comes out. It would actually be at the opening price of this mother candle. So you've got another opportunity here. From here, I will put that as blue. So this will give you an idea that USD JPY will have more further what you call that further buying opportunities at this area right here, following this mother candle. This is on a daily chart. This is a mother candle, bullish mother candle, that is worth about 50 pips, about 57, almost 60 pips. So let's say about 50 plus pips, right? So that is the area. So that is the opportunity for the buy when price does go up a lot more, because now maybe it might reverse at any time now here. But if it does actually get pushed up by US data, let's say ADP today positive, a lot of news are giving a lot of good hints that the USD is going up, and then the yen is really weak, then it might break out there. Now, the moment it breaks out to the blue line is at 10974. So you need to wait for 10990, which is your entry area. Your entry price could actually be at 10990. Okay, 109, see, 10990, because it's just too close to 10980 psychological number. So 10990 is up there, right? So you are buying only above this line. So let me just get rid of that one. So you can see that it's actually reducing your profit potential, but this is what the market could potentially give you in a safer environment. Okay, so then your exit price at the end of this bullish candle was at 11032. So you can take the risk at 110, let's say 11040, or even 11030 itself. So 1030, let's say around here, go down, that's about 30, that's about, you've got an opportunity of about 40 pips. So let's say you've got about 30 pips potential. Okay, so here, if you were to buy here and you've got 30 pips potential, then you want to buy and exit, okay, at 110.10. Okay, 110.10 would probably be better, or 110, 11030, 11040, because that one there is 11033. Even 11030, yes, you can make about 40 pips or so, but make sure you exit at any case before 110.33, because that's the closing price right there. Okay, because what could also happen is this upward type price may come down anywhere in the middle here as well, because you've got the bearish candle right there, and it came down at 110.15. So that is another area that you can make about 25 pips or so there. So if you buy there, you can make 25 pips or about 30 pips. So it's about 30 pips opportunity right there, but buying at 10990 onwards. Okay. Okay. Is that clear? You guys all right so far? So far, so good? Okay, good. Okay, brilliant. Good. Okay, guys. We will look at USD CAD as the last one. Just want to point out as well, oil really worked very well. Oil worked well with the ABCD pattern. It went up all the way, and basically quite a number of oil traders have actually take profited as high as there. They have started trading at 62.80 area all the way up, so they've been very happy. So it worked well with oil as well, both US oil and UK oil. So let's look at USD CAD. Okay, so USD CAD. Okay, let's look at the price. Now it's on the downside bias on a weekly chart, but let's look at the daily chart. Again, very clear downward bias, very clear trend as well on the downside on the daily chart. On the 4-hour chart, still downside. 1-hour chart, a bit of correction, but overall bias is on the downside for USD CAD. So let's take a look at the daily chart right here. Very, very strong downside bias, but I want to look at also the weekly chart. I want to zoom out a little bit. I want to look at, as far as it goes down, the downside is quite clear on the bias of the downside, especially on the daily chart, 4-hour chart, 1-hour chart, very clear on the downside. But then as it goes down, I can see that you've got this support area, and this support area to watch out for. So that means it might reverse quite soon. Okay, the price now is at 23.00, so it could actually reverse at 23.00 area, 10 pips above 23.10 at 23.00, or 10 pips under 23.00. So this area could actually be looking at reversal at any moment of time. So I want to highlight this area, support zone as well. So, and I want to also highlight this one here, and then this one here. Okay, so this is on the weekly chart. So let me look at USD CAD. There is a potential of a reversal coming anytime soon, I would guess. Also because if I look at this area right here, I can see that there is a support zone, a buy area starting at, because of the bullish candle right here, starting at 23.50 area. So 23.60 on 23.30 onwards, it's actually has got big buying movement. Okay, so at the moment I think it's got more chance to actually buy. I mean, buying positions would actually be better than selling position, mainly because you have got a correction, I think, at this moment of time. If at all something is going to pull it down, and you've got negative news of USD pulling it down, for example, then it might actually come down, but then there is a limit for it to come down to only at the 2150 area, and then it will go back up again. But I think, in my guess, because of it depends on the USD position, USD ADP news today, if it is going to be positive, then it most probably would actually encourage price to pump up a little bit and go above. So now it's at 2304. So 1.2310 is a better buying price. You can buy at 1.2310, or better if you wait a little bit until the ADP news and all that. And you can do a pending order at 1.2330. So 1.2330 is actually good to buy. And then your exit price would actually be, let's say, you can make about 50 pips or so, but your exit price, let's say 2410. Okay, 2410 before the 2420 psychological number. So yeah, you've got some pips there to actually make, but you need to wait. You need to wait a little bit, so then it goes above this area especially, and then you can actually buy. So yeah, 23, yeah, 23 area, 2330. Yeah, so 2330 would be a better price to buy. You can do a pending order 2330. Maybe you can ride along it when the burst of price goes up with bullish mother candle, mainly because of the news. So maybe something that is in the news, and then the economic data released as well for ADP, then if it is positive, then you might catch that. that price, but we want to be careful. We don't want to be like too overly. You can actually make about 50-60 pips or so on that, buying at 1.2330. So 1.2330, you want to exit at 1.2370 at least. You can make yourself at least about 40 pips, okay, on that, on USD CAD. If the price goes up there, that's why it's not to buy now or to sell now. It's just to arrange a bit of a pending order, mainly looking at how USD is performing at the moment on the heat map. It is more on the bias of bullishness. Okay. All right, guys. Is that okay? Shall I end the session for tonight? Is all good for you guys? Yeah. For today. It's night going to be night yours, mine's afternoon. Yeah. Okay. All right, that's brilliant. Thank you, guys. Thank you for your time, and we'll see you on Friday on Friday's market wrap-up session by Bretton. Okay, have a great day, you guys, as well. Thank you, Alfred. Take care, and yes, in any case, you guys can always communicate on the GTI group or directly to me on Telegram. No problem. See you guys Friday. Happy pipping. Take care, guys, and we'll see you on Friday.